Today we're going to look at stocks, and what we're going to do is find stocks that are in a certain sector of the economy, which is automobiles. We're going to look at foreign stocks, and we're going to look at local American stocks. This is looking at it from a United States point of view. Go to yahoo.com, click on finance, you go to quote lookup, but then you need the ticker symbol. So for Toyota, you go into google.com, do a query, Toyota, ticker symbol, and you'll find it right there, NYSE, TM. So TM is the actual ticker symbol. You'll need to find, it's good to look up about 5 of these stocks at a time. And what we're trying to do is find whether a certain, next one's Tesla, is to find whether a good stock is out there that we can buy. And we're going to look at some of the fundamentals. Now, this is not going to have all the fundamentals. There's a lot more. We're covering the most basic of them. And also, you just basically have to look at these certain ones, and you'll see what I'm talking about in the spreadsheet. So I recommend you making a Excel spreadsheet. I call mine stock picks. And there's the price. And what you're going to do is, the price is also called PPS, which is price per share. So if you look over, there's right next to the ticker, there's the price per share 127.06. $127.06. So then you've got the different columns that I have. I have the PE, which is price over earnings, the dividend percent, the earnings per share, which is EPS, and the PPS low is the question mark is there is because you basically want to know whether the price is low or not. So you look at the income statement to see the revenue and see if it's actually making any revenue. And now notice here that there's no EPS here. It's probably just not been reported, so you want to check on different places and not just rely on Yahoo alone. You might want to use your broker or something else. I'm just using Yahoo because it's publicly available. So basically, you need to make sure that the company is profitable. So a company that doesn't provide a dividend is trouble to me. I don't ever buy, almost never buy a company that doesn't have a dividend. So here's the PE ratio, which is price over earnings. So what that means is basically in about 7 years you should get your money back in 7 years. So anything under 10 is generally good, but that's not the only thing to look at. The next thing to look at is the dividend. That's 3.21. So basically for Toyota. So that means you'll get 3%. So say you put down $100, you'll get $3.21 back per year, split up by 4 quarters. So you'd have to divide $3.21 by 4. So next we're going to look at the PPS. And we're going to try to find out whether a lot of this is subjective. So it's kind of hard to tell you exactly. There's no hard and fast rule on whether the price is actually low. But what I'm doing right now is I'm looking at different times, whether it's year to date, 6 months on the price. Is it high? Is it low? Is it an all-time high? And if it's an all-time high, I wouldn't recommend buying it. Generally, you want to buy, like Warren Buffett says, you want to have a certain amount of percentage off. Generally, he goes about 20 to 30%. You want a margin of safety, that it's called. So what you want to do is it's not always wise to buy, even if the stock is a great stock. You might want to wait. Keep your powder dry and wait for the stock to go up after you buy it. But when you buy it, you actually want it to be down. Wouldn't be as low. Now Tesla is way overpriced in my mind. It's to me, now you can make money off Tesla, but it'll be despite the fundamentals. We're looking at the fundamentals right now. So they don't have any PE ratio because they have no earnings. They're negative 81 cents per share. Earnings per share is negative 81. And they definitely don't have a dividend. And if they did, that would be also scary because they wouldn't be giving away the money. Now, they're a growth company, and they're a newer company compared to, say, Ford or GM or something, or Toyota. And they do have a lot of potential. So it's not apples to apples and oranges to oranges. However, I would be very wary of buying Tesla at this price. Maybe if they were half price, I might think about it. But honestly, there's so many great stocks out there, you don't need to buy them. So the earnings per share is $3.26, but this is on GM. but look, the dividend, it's gone. And any company that's not paying a dividend, there's trouble. So it's good that they're making some money per share, but they're just not going to give it to you. So now eventually they should give it back to you, and historically they have. And same thing with Ford. But when a company's in trouble, one of the first things that goes is they usually lower the dividend or cut it entirely. And sometimes they'll say, oh, it's temporary, but and sometimes it is. And Ford has been one of those companies that long term it's been a real stable company. However, it's got a lot of trouble. Like notice the earnings per share is 78 cents, negative 78 cents, no dividend. And also be wary of dividends that are higher than earnings per share. Now it is possible to go 3-4 quarters, maybe a year, even maybe a year and a half even. It's possible, especially some oil stocks, that they could actually give out more dividend than they're actually making. But you don't want a company to give out more dividends than they actually make per share, unless it's a seasonal loss. But sooner or later, they're going to cut it. Now, we're looking at Honda Motor Company right now, which is looking quite good. The PE. Now, this PE, I looked this up. This is why you have to double check the numbers. 4.53 is not correct. It's actually 10.97. But you have to look at. I looked at my broker, and I checked the actual price. So right here, I put down on the column 4.53, but it's actually 10.97. So how you do that is you get the price and you divide it by the actual EPS. So $26.23 divided by $2.39, and they'll come up with 10.97, which is almost 11. But still, it's a good price. It's a good PE. So of these 5 we looked at, we've got Toyota, Tesla, GM, Ford, and Honda. And the only 2 that are even remotely worth buying is Toyota and Honda. The fact is that Tesla, GM, Ford, I wouldn't buy them at all. That's why I put red in the column. You ought to you don't have to go for just for stocks for automobiles. It could be any sector. It could be electrical companies. It could be utilities. It could be oil. Whatever you want to do. But I'm just giving you an example of how you should. This is just a surface examination. What I would be is very skeptical, and I would look at the stocks and see whether they're really worth buying. And even if you decide to buy them, you can always just watch them for a few weeks. Once you buy, you can't unbuy unless you're going to sell and sell at a loss, unless it suddenly just pops up. But the point is that you might just get lucky. The point is that you want to get a good price for a good stock, not just, like Warren Buffett says, a margin of safety. So if you were to buy, like, say, Coca-Cola at a 30% discount, you've made a great buy. Even if the market's tanking and it goes even lower, still you got a great price at it. You can always buy down, average down. So this has been EmersusTech, and I hope that you enjoyed this video. Oh, by the way, and do not sue me, because if you buy a stock that doesn't do well, this is just an example of how you can research stocks. This is not a recommendation of Toyota, nor of Honda Motor Company, or any stock that I've mentioned. So thank you. Have a nice day.